Chang, and this is Bloomberg Technology. Coming up, DoorDash becomes a food delivery unicorn after a massive funding round led by SoftBank. Our look at the growing list of the tech startups winning the $100 billion Vision Fund lottery. Plus, the EU ultimatum. Big tech platforms have a new deadline on hate speech and terror propaganda. We are live with an update from London. And 1 year ago tomorrow, Snap officially went public, but employee morale today is at an all-time low. We look at the hard year that was for the social media company and the road ahead. First to our lead. U.S. stocks continue to sell off. All the major averages tumbled more than 1% in Thursday's session after President Trump promised to impose substantial tariffs on foreign metals. But investor reaction wasn't just in the industrial sector. Tech stocks were also hard hit, with Tesla, Nvidia, and Alphabet among the biggest decliners. For more now, we're joined by Romain Bostick, editor of Bloomberg's Top Live blog in New York. So, Romain, first of all, walk us through the day that was.
Well, I mean, we started out actually in a pretty good place. I mean, the market seemed to actually appear to like some of the comments that were coming out of Jerome Powell, who was testifying on the Hill earlier this morning. Stocks were actually a little bit higher. And then right around noontime, Eastern time, right around lunchtime here, the president came out with a statement basically saying he's going to slap tariffs, 25% on steel, 10% on imported aluminum, and that just started really a long, slow decline. We ended up down about 1.4% on the S&P, down about 1.7 on the Dow, and about 1.3 on the NASDAQ. It was not a good day, and a lot of this really had to do with the fact that people really were not expecting some of the trade rhetoric and the trade talk that's been coming out of the administration to actually culminate in some sort of decisive action the way he at least indicated he's going to take today.
Now, this kicks off the first session in March after a disappointing monthly performance in February. What are we looking ahead to?
Well, I mean, we started out today. I mean, this was really not the right way to kick off the month. But, right now you're talking about a scenario where for the last few weeks, we've been worried about monetary policy. We've been worried about fiscal policy. And now all of a sudden you have this sort of trade policy factoring into the equation as well. And that's causing a lot of people to retrench, or at least to try to reprice where they think equities should be. We saw a lot of people coming out of equities, primarily the big mega cap multinational companies. You saw it in Apple, you saw it in Google, you saw it in Tesla, you saw it in Pfizer. These are all companies that get at least 50% of their sales from overseas, or at least outside of North America, and that's going to play into how investors value them should this actually escalate into some sort of prolonged trade war.
Do you think the volatility that we're seeing now will spread globally?
Well, it's certainly not going to be good for Asia going into tomorrow. I mean, keep in mind, the VIX is up about, 35% just this week alone. You're seeing a lot of volatility in other areas of the market. I mean, the dollar weakened against all of the major currencies. When you have this type of uncertainty where investors cannot look at their portfolio and make an accurate assessment about where that portfolio is going to be, say, in a month from now or 2 months from now, you're going to get these types of swings as, people take different sides of the trade.
All right, Romain Bostick, editor of Bloomberg's Top Live blog. Thank you so much for giving us that update. Well, the latest winner of the SoftBank lottery is DoorDash, a food delivery app. SoftBank's Vision Fund is leading a $535 million investment in the San Francisco-based company, almost triple the amount of capital the company had raised in the last 5 years. SoftBank has invested in more than 20 companies since the Vision Fund was created, pouring billions into tech firms like Uber, Arm, Nvidia, WeWork, and Flipkart. Olivia Zaleski covers venture capital for Bloomberg Technology and joins us now. So, Olivia, DoorDash has had its struggles. When I saw this number, I was shocked. It's a lot of money.
It's a huge amount of money. And I think it really speaks to the confidence that these major investors have in the food delivery space, which about a year ago was sort of floundering. People were wondering, well, what's going to happen with food delivery?
Many haven't survived. There's like a graveyard of these companies.
Yeah, but Uber Eats has really come up as a sort of a standout app. It's very popular. Uber CEO Dara Khosrowshahi saying very recently in January that he thinks that Uber Eats is going to be the most successful food delivery business in the entire world, and speaking to how it's really, one of Uber's most successful offshoots.
Is there a conflict of interest here then? Because SoftBank is also a big investor in Uber.
Yeah, that's a good point. So SoftBank did put about $9.3 billion, just a small amount of money, into Uber last year, and obviously putting in a huge amount of money, just about over 50% of this $535 million into DoorDash. So some people could argue that's a conflict of interest. I think what it really says is that SoftBank wants to spend a lot of money on different bets and is sort of placing another chip, so to speak, on the roulette table, and it sees that there's space for both to win.
Caroline Hyde caught up with Rajiv Misra in Barcelona earlier this week, the CEO of the SoftBank Vision Fund. Take a listen to what he had to say.
What we want to do is to empower the consumer, because we believe we are in a secular trend where technology is going to not only bring access to 1 billion more consumers around the globe to the internet and the digital world, but also to the existing consumers, give them better services and products and eliminate distance and time, where no matter where they live.
So he's speaking there a little bit to their consumer-focused strategy. As I mentioned, they've invested in ARM, NVIDIA, WeWork, Flipkart. Why DoorDash over one of the more perhaps popular alternatives, which is Postmates?
Yeah, I think so. Postmates and DoorDash are actually quite different. A lot of people don't realize this. DoorDash has built its business really focusing on the restaurants and building these partnerships and allegiances with them, trying to get to provide sort of the data for the back end of the companies, letting them know what customers really want, what meals they prefer, even helping them build out their kitchens, where a company like Postmates is focused more on developing relationships with the customers. And I think what we're seeing here is that investors actually feel like the restaurant approach is more defensible. A restaurant, especially a large chain like a Wendy's or McDonald's, is going to be less nimble, so it's going to pick one partner to work with, whereas customers are fickle and they're going to go where the best deal is and where they can get the least expensive delivery.
Now, it's interesting because DoorDash is a company that was actually struggling to raise money, and these Vision Fund investments are so large, and you have to wonder, are they keeping companies afloat that shouldn't be afloat, or are they giving companies a chance that should have had that chance but maybe wouldn't have gotten it otherwise?
Yeah, that's a tricky question. I think it's a good question to ask Tony Xu, who's going to come on the show tomorrow. Some would argue that they just needed a little bit more time to get settled. They just need a little bit more runway. SoftBank, I think, certainly thinks that it's a good business and it sees potential in the delivery space. One thing Tony Xu said to me yesterday when I spoke with him on the phone is that we've really only scratched the surface in food delivery. 95% of deliveries are still made through the telephone, which is pretty remarkable when you think about it. Only 5% are made through mobile and websites. So I think investors see that there's a large opportunity here. Tony said that he sees this market as a $200 billion market potential worldwide for food delivery. And millennials, they don't want to get off the couch. We want to sit and get our food delivered to us. We don't want to go to the restaurant.
I don't want to get off the couch either. All right, Olivia Zaleski, Bloomberg Tech reporter who covers food. Thank you so much. And as Olivia mentioned, this Friday on Bloomberg Tech, we're going to have more on this story. We are going to speak with DoorDash CEO Tony Xu. Well, Bloomberg has learned that iHeartMedia could be planning to file for bankruptcy as soon as this weekend. Advisors to some of iHeart's senior creditors have been shown bankruptcy papers that would be used on the first day of court proceedings. Now, while Liberty Media has stepped in with a last-minute offer to try and save iHeartMedia, analysts say the bid isn't high enough to sway creditors. The media and entertainment company has struggled to meet payments, missing interest due on the 1st of February, and on 2 more sets of bonds. Coming up, European regulators are giving big tech firms new orders concerning illegal content on its platforms. Can the likes of Google and Facebook keep up with removing material? We'll discuss next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Customers of Sky TV, the UK's pay TV giant, will soon be getting access to Netflix on their set-top box. Users who already have Netflix will be able to bundle the streaming giant into their existing bills. The move comes as Netflix continues to gain traction in the UK, gaining 7.5 million subscribers since it began operating there. Well, big tech firms have new orders from the European Union. Erase illegal terrorist content within an hour of being flagged or risk facing new laws and stricter regulation. In a statement, the European Commission stressed the importance of the policy, saying, considering that terrorist content is most harmful in the first hours of its appearance online, all companies should remove such content within 1 hour from its referral as a general rule. Bloomberg's Caroline Hyde has been covering this from London, so obviously the EU, Caroline, has been putting pressure on these companies for some time now. Now, 1 hour, is that possible?
Well, that's the key question. They certainly think it is. Almost, I wonder if Facebook, Google's YouTube and the like have been a victim of their own success, because they have been getting faster. They've been putting AI, artificial intelligence to work. They've been bringing in bigger teams. We heard from Facebook about 6 months ago saying we now have 150 people dedicated to taking terrorist content off of our network. And so therefore, the EU saying, go faster, go faster, go faster. 2 years ago, we heard from the companies themselves, the owner of YouTube, Google, Facebook, Twitter, for example, saying we personally will sign up to taking down this sort of content, this illegal content, within 24 hours. But then the talk got tougher from the likes of the governments. Germany said, OK, we hear you. And if you don't take it down in 24 hours, we're going to fine you up to 50 million euros. Then came the UK Prime Minister about 6 months ago saying, 24 hours, poof, I want it down in 2 hours. And now we hear the EU saying, we think you can do it in 1 hour. These are just soft laws. It's not actual legislation. But still, they clearly feel they can double down and get more efficient.
Have the social media companies reacted yet? What have they said?
They're straining with this. I mean, haven't come out individually, but we've heard from representatives of the companies. In particular, I'm going to bring your attention to the Computer and Communication Industry Association. They're saying, look, such a tight timeline. They say it does not take due account of all actual constraints linked to the content removal, and it will strongly incentivize hosting service providers to simply take down all reported content. And here, Emily, is the real kicker, because what if this actually impedes free speech? This is something that's been brought up again and again to the governments, to the EU, and they haven't really got a good answer for it because, well, not all terrorist content, perhaps if you're going to give them just an hour, maybe you're going to mix it up with actually people's views. Maybe you're going to be actually stifling free speech as much as it might be hurtful. As long as it's not inciting hatred, maybe it still has a place online. And therefore, there is this difficulty that seems to be rising, and digital rights groups are coming out saying, look, you're asking Facebook and Google to be censors here. You're institutionalizing, they're saying, the role of Facebook and Google in regulating free speech of Europeans.
Europe has been putting far more pressure on these companies than the United States. Why do you think that is?
I think this is cultural, and I think, very sadly, to put it frankly, there are more terrorist attacks in Europe than there have been in the US. I mean, we've had a whole spate of them. You think of the atrocities that have occurred in Paris over the past few years. Last year, it really did get brought to the fore by the United Kingdom because we had the terrorist attack in Westminster. You then had the terrorist attack at the music event in Manchester. The governments really remain powerless as to how to control this, so they took on the main area that they felt they could control, which is the social media giants. It rather helped that they weren't grown on their own soil and they could attack the US that little bit more. But notably, they have been trying to really show some sort of authority and response in this way. And it's interesting that I think also the governments have realized that artificial intelligence could indeed help them in this area. They could get faster. And as I say, maybe a victim of their own success. We have seen more success rates coming from Twitter banning, almost 1 million user accounts because of the terrorist and hate speech that we heard coming from them. We do see, therefore, more calls for this. But I raise your attention to the General Counsel of Google, who said about 6 months ago, he said, look, still computers aren't there yet. You need a human touch. And therefore, can you really bring down this content in just an hour?
So when it comes to AI, how does that, quickly, Caroline, play a role here? AI versus humans.
Yeah, I think at the moment you have seen Facebook has come out and said we are deploying artificial intelligence to be able to see what is terrorist-like activity. Maybe they'll see some types of videos and the computer will be able to recognize that this is indeed terrorist-related activity. And actually, all the companies have been working together. We heard from the likes of Facebook saying, look, we've actually gathered together and we can place a marker on one video that then if we see it being uploaded to a different social media resource such as YouTube or perhaps Twitter, it will automatically come up in those companies' books and they'll be able to automatically take it down. So artificial intelligence and camaraderie has worked to a certain extent. I think what the EU is calling on is, yeah, we hear you. We see that the big companies are working well here. We know you've got money to put into AI. What about the smaller players? What they don't want to see, Emily, is this sort of illegal content come off of the big players, but suddenly rear their ugly heads elsewhere into smaller social media platforms that perhaps don't have the AI machine learning resources that the bigger players do. So they want them to work together. They want them to get more computers involved. But as the big companies still say, look, we need humans on this as well.
All right. Caroline Hyde for us in London. Caroline, thanks so much. Coming up, Snap is celebrating its first birthday as a publicly traded company. We take a look at the volatile year that was and what is next. And Bloomberg's Tech is live streaming on Twitter. You can check us out at Technology, weekdays, 5 p.m. New York, 2 p.m. San Francisco. This is Bloomberg. Snap is celebrating its IPO anniversary, but hasn't been all smooth sailing for the social media upstart. Bloomberg's Sarah Fryer looks at the highs, the lows, and the road ahead.
It's been 1 year since Snap's IPO, and we still have a lot of questions. After Snap went public, it made huge changes. It rolled out a bidding-based advertising model, which caused average ad price to fall. It also redesigned the Snapchat application to separate friend posts from posts by celebrities and the media. That's a move that has seen lots of public backlash. In fact, there was one tweet by a certain social media superstar that wiped out $1.3 billion of Snap's market value in a day. Last month, the company posted its first quarter actually beating analyst estimates, causing the stock to surge 47%. And Snap's fan base is growing steadily, with daily active users pushing 200 million. But internally, Snap didn't meet its own goals, so employees didn't get the 2017 cash bonuses that were planned. The leadership team has been working to improve employee morale, trying to work a little bit on their transparency. But Chief Executive Officer Evan Spiegel has a reputation for not appreciating criticism and has lost a slew of top executives since the IPO. There's one point analysts keep making in Snap's defense. Facebook's first year public was crazy too.
Joining us now, our very own Snap expert, Sarah Fryer, here to dig deeper into what you heard. So talk to us about what's the bigger picture when it comes to morale. What is happening?
So this is a company where there's this feeling that you can't really criticize Evan in meetings. He's aware of this criticism, and yet when people have left the company, top executives, they've been replaced with people who sort of understand this culture, including the general counsel, who was actually Evan Spiegel's personal lawyer beforehand. So there's a lot of concern that maybe he's not willing to take in feedback, but the company is aware of this and they're trying to fix it. And Evan actually sent a memo to his employees saying, you know, don't make decisions just because you think it's what I'll like. Make decisions based on what you think is best for the company. Beyond that, they're doing surveys. They're trying to do more open Q&A sessions.
Right, and he's talking to the company
more about what's going on. So maybe those are positive steps in the right direction.
I mean, we saw Mark Zuckerberg, for example, make a huge evolution over the course of running Facebook. I mean, do you think the same is possible with Evan Spiegel?
I think it'll have to be. I mean, he's certainly gotten to the point where Snap is trying to establish itself as an advertiser. But if you look back at the first year of the company, it has been a very volatile year, in part because of the decisions the company made about what it wanted to change. There was the advertising business that it used to be a very premium buy to buy a Snap ad. You'd buy it directly through their sales force. Now it's bought via an automated bidding system. And because it's a bidding system, everyone's getting used to it. There are more marketers playing along and the demand is low for now. So the price went way down, but they're building that up. It's going to become a little bit more familiar. And on the flip side, we've got the redesign, which is a complete rethinking of how users should use the app, separating the social from the media. And it's gotten some public criticism, as we mentioned in that segment. So they have a lot to build from. It seems like they've sort of established themselves, and now they need to make sure that people understand that they have a clear vision going forward.
Speaking of Mark Zuckerberg, sold nearly $500 million in Facebook stock last month.
Yeah.
What's the story there?
Well, this is actually not a surprise. Zuckerberg has said that he's going to try to unload a lot of shares to be able to spend that money on his philanthropic investments. This is something that we'll see a lot more of in the future because he's trying to get rid of an extremely high amount. The thing that's interesting about this now, of course, is he tried to get through this provision that it would not reduce his voting power to offload shares. Shareholders went against that. A suit was dropped. They settled it. They said they were not going to do this change after all. And so now, as Zuckerberg unloads his stock, he has less voting power.
Also interesting, given that it wasn't a good month for the markets. But Sarah Fryer, as always, thank you so much for that update. Coming up, Spotify seeking support on Wall Street after rolling out its unusual IPO plans. We'll hear from an investor in the streaming music service next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. We continue to dig into what could be one of the biggest tech IPOs of the year, Spotify's direct listing. The company's valuation rose to as much as $23.4 billion in the private market this year, as co-founders Daniel Ek and Martin Lawrenson hold a majority of the shares. And Tencent ranks as the third biggest shareholder after snapping up more than 8 million shares of Spotify last year. For more, I want to bring in Nimei Mehta, partner at Lead Edge Capital and also an investor in Spotify. Nimei, thank you so much for joining us. We've been talking a lot about this non-traditional listing. What do you make of it? Because it is a bit of a risk.
You know, I actually think that the direct listing signals a lot of strength by the company and by management. You know, most businesses, when they go to a traditional IPO, they raise money. So they put money on their balance sheet and with the intention of spending it. Spotify's management team is coming out and saying, hey, look, we don't actually need to raise money. Our business is free cash flow positive. We're growing. We've got a really strong balance sheet. We're adding subscribers. And so we don't need to go and raise new funds in order to fuel our growth. And you know, but at the same time, they do have an ambition of being publicly traded. They do want to recognize some of the value that shareholders have created over time in the business. And so this is sort of a happy medium between being publicly traded, but not necessarily needing to dilute themselves or other shareholders and raise money that they don't need to spend.
This will make it easier for investors also to sell their shares. And earlier, is that something that you plan to take advantage of?
We're very bullish on the business. So I think, you know, we have a very long-term view on Spotify. We believe that, you know, the company is poised to grow for a really long time. And today they have got 160 million monthly active users, 70 million subscribers. But we think that number can grow into the hundreds of millions of subscribers over time and be a business that's valued similar to Netflix. And so I think our goal is to be long-term investors and holders here. We've been investors for a while now, but there's nothing stopping the business at this point. Their market leadership, they've got more subscribers than Apple Music, almost twice the amount. And we feel like they're just scratching the surface for what is a long journey of streaming adoption and in music.
We've been talking about Tencent's relationship with Spotify. Obviously, they have Tencent Music, but do you think that that investment from Tencent could catalyze more global growth for Spotify particularly?
So Spotify actually made an investment or a share swap with Tencent back in the fourth quarter. So Spotify does own a piece of Tencent Music, and so that is their angle or play in the China market. Spotify is already operating in 61 countries today, so they do have a global audience and footprint. They've got more than 1 billion smartphones in the markets that they operate in today, and over 3 billion folks that listen to the radio. So It is a global business already, but as it relates to China, their angle is their exposure to the Tencent music asset.
We've also been talking a lot about the Vision Fund. They just made a $500+ million investment in DoorDash. This is a company that had struggled to raise money. I'm curious if you think SoftBank is good or bad for the tech startup ecosystem.
I think in general, we've thought about this a lot, and I had debates internally. I think the idea of a long-term, very patient-oriented investor in general is always well received by entrepreneurs and investors combined. So SoftBank has demonstrated their ability to be long-term. We saw what they did with Alibaba. They were investors since, for more than 15 years now. And so having a patient investor by your side, I think, is very valuable. And in many ways, SoftBank is offering an alternative to some of these businesses going public. So we think that's a positive. I think that the debate we have internally is around quantum and the amount of money. And what is the appropriate check size for some of these businesses? In all candor, some of the investments we really understand, and some of the investments, I think we're trying to figure out what we're missing and trying to build a better understanding of what SoftBank sees long-term in some of their opportunities.
It's also more competition, frankly, for investors like yourself, regardless of what stage you're investing at. And I'm curious if it's going to be tough to compete in a world where they just have sort of unlimited amount of cash.
Well, typically at LeadEdge, we are investing a bit earlier in the life cycle of a business, and so it's possible that we could hand our shares to SoftBank. I think that the global tech markets and the amount of enterprise value that's been created over the last 5 years, you look at Amazon and Facebook, we're talking in the trillions of dollars of market cap. So the question isn't so much rather what comes out of the pockets of private markets investors, but rather maybe do most of these businesses decide to go public even later than they otherwise would have. And so in the case of Amazon, which went public at less than $1 billion valuation, you saw Facebook at 50 billion or 100, and then Alibaba at 150. Is that the trend that continues, and then there's more value that accrues to folks on the private side versus those on the public side?
Now, you have a fairly diverse portfolio. Where are we going to see you placing your bets in 2018?
We continue to look at artificial intelligence as an area of focus. Security continues to be a huge area of focus for us. There's a lot of spending going into security by CIOs. And then internet marketplaces globally. I think the ride-sharing phenomenon, we continue to explore abroad and derivatives of it. So both on the internet and software side combined.
All right. Nimay Mehta, LeadEdge Capital Partner. Thanks you so much, Nimay, for joining us. Some deal news to report. Microchip Technology has agreed to buy Microsemi for about $8.35 billion, continuing a wave of consolidation that is sweeping through the semiconductor industry. Microchip will pay $68.78 a share in cash. That is a premium of 7% on Microsemi's closing price of $64.30. The deal subject to approval by Microsemi shareholders and expected to close in the second quarter. Coming up, can Twitter finally be nice and end its online harassment problem? That is what CEO Jack Dorsey's latest tweet form says must happen next. This is Bloomberg. Uber is getting into healthcare, but it's not through some wearable tracking device. The ride-hailing giant is partnering with healthcare organizations to allow healthcare professionals to order rides for patients going to and from locations where they receive care. The news comes on the heels of a new but yet to be peer-reviewed based study that shows that when Uber enters a market, ambulance use drops close to 7%. Meantime, former Uber CEO Travis Kalanick has found his first known gig since he was ousted from the company he co-founded. Kalanick is joining the board of his friend's medical office software company. The startup, called Cario, is based in Irvine, California, and has raised $125 million in venture capital. Kalanick resigned as Uber CEO in June, but he remains on the board. Well, it has been Twitter's biggest pain point since almost the very beginning. The platform is a go-to place for real-time communication, but also a swamp for toxic conversation, trolls, and harassment. Now the company is admitting it and wants to become a nicer place. In a series of tweets, CEO Jack Dorsey explained, "We are committing Twitter to help increase the collective health openness and civility of public conversation, and to hold ourselves publicly accountable towards progress. So what does that mean exactly for Twitter's 330 million users? For more, let's bring in Bloomberg Tech Selena Wang, who covers Twitter. So look, they've apologized many times. They've said they're working on it many times. They've changed/improved the rules many times. Some things have gotten better, but still there's a huge problem. Can Twitter do this?
I think in a certain way, Jack's tweets are momentous in that the type of public apology he's issuing is much broader than what he said before. It goes beyond abuse and safety, he recognizes. It's about the overall public conversation. So hopefully what he said in these tweets will actually play out. A big criticism of the way that Twitter's handled abuse and harassment is that it's very whack-a-mole. They're not looking at it holistically. So here now they're saying that they need to find some sort of systemic approach to look at this across every division, across consumer, ad sales, product, to really try to solve this problem from a high-level standpoint.
So a little more about what he said. We've witnessed abuse, harassment, troll armies, manipulation through bots and human coordination, misinformation campaigns, increasingly divisive echo chambers. We aren't proud of how people have taken advantage of our service or our inability to address it fast enough. He's talking about committing to a rigorous and independently vetted set of metrics to measure the health of public conversation on Twitter and to share those results with the public. Same time, Walt Mossberg, longtime tech columnist, writes back to him, first, enforce your current terms of service. Again and again, your staff refuses to delete the accounts of racists, anti-Semites, homophobes, inciters of violence, harassers, and other crystal clear serial rule breakers. And second, purge your system of bots. I applaud your recent steps against bulk tweets, but automated non-human actors are a massive problem, and it's not just the Russians. Bot designers' ability to game Twitter undermines all the principles you cite. Laying it on thick.
There's a lot to unpack there. First of all, let's talk about this public outcry that they're asking for. They're asking for submissions from people to help them decide how they should determine the health of conversations on Twitter. Jack is admitting that they need to figure out how to make the conversations less toxic and more civil, but they don't quite know how. So it's open to anybody in the public. They're going to be providing them data access to Twitter as well as funding, significant funding.
But part of the problem, as Walt says, is that Twitter doesn't always clearly enforce the rules that it already has.
And I think a prime example of that for many people is Donald Trump, the fact that the president of the United States is still allowed to tweet controversial and somewhat hateful and some say abusive content. Now, Twitter obviously has this very fine line to walk, which is how do they determine this difference between hateful content and not running into free speech issues. And let's be real here, a lot of these very perhaps more controversial and hateful accounts have huge followings, and they don't want to lose their monthly active users and the type of audience that those players draw to the platform.
And quickly, what about bots?
Well, this is part of the overall bot problem that they face. I think there's still a lot of skepticism around how much of the technicalities that they can actually fix, given the fact that they don't have a huge engineering headcount like a Facebook or Google can do to hire these people. As they're trying to clamp out these automated bots, we're still seeing every day more and more fake accounts and bots being created. So it's still up in the air whether or not they can truly clamp down on that problem.
All right, Selena Wang, who covers Twitter for us, thank you so much. Lots to do. And we should note Bloomberg LP operates a global breaking news network on Twitter called TikTok. Coming up, when it comes to social media, platforms like Facebook, Instagram, and Snap reign supreme. But a new upstart wants to be your go-to sharing destination. That is next. This is Bloomberg. Equifax says an additional 2.4 million Americans were impacted by last year's data breach, but to a lesser extent than the original 140 million plus people who had their Social Security numbers compromised. The credit union says newly impacted consumers had their names and partial driver's license numbers stolen, but not information on where and when the licenses were issued or their expiration dates. It's called Vero, meantime, and last week it was practically unheard of. Now it's making a push to be your go-to social media app. Vero rocketed to the top of the Apple App Store by promising to be free of all the things users hate from its social media rivals, things like ads and algorithms that keep your feed from being chronological. But is it enough to topple the likes of Instagram and Facebook? Bloomberg's Caroline Hyde spoke to Vero CEO Ayman Hariri to find out.
I think there's been a growing sentiment with people who use social media today where they feel that the network doesn't allow them to grow their audience in a way that makes sense to them. So what differs between Vero and other networks is that we provide a platform that is free of algorithms, free of ads, free of bots. So it's basically your relationship with your audience directly and using a chronological feed.
Can you give us an update of just how many people are coming on to the app on a daily basis at the moment?
So we just announced that 1 million users have registered on Vero, and we're seeing tremendous growth on an hourly basis, which is affecting the performance of our servers that we're working very hard to put things back into a normal operational state.
And you say there the differences that you have with the likes of Facebook and Instagram. You talk while you have these technical issues that you won't be bringing in any sort of payment for to subscribe to Vero. Will you start to overcome those challenges, and will we start to see adverts come from you, or indeed some sort of money making for this particular app?
So what we announced today is that while we're sorting out the technical difficulties that are associated with this tremendous growth, we aren't going to turn on subscription, and therefore everybody who registers today gets Vero free for life. But what we will announce in the future is a date when we will commence a subscription, and that'll be for new users. So everybody registering today gets to use Vero free for life. We won't charge them. We won't turn on subscription for them. It'll only be for new users downloading the app. They will see clearly a subscription amount and all the details with that.
When you talked about the reason for your sudden popularity and perhaps some of the frustrations with rival social media, I'm going to put in your mouth, perhaps we're talking Instagram here, we're talking Facebook, and the algorithms that were underplay, the adverts. What about the rise of fake news, for example, as well? What do you think has been the sudden catalyst? Because Vero's been around since 2015.
Yes, that's right. And we've been building things, very purposefully, looking at every feature that we put in to always question, not with a target to create addiction, but to make Vero a useful tool and a habit. We're not interested in the amount of time that you spend in the app, how many times you open up the app. We just care that you find it useful in whichever of the features that it has. It isn't a normal thing that everybody uses the word algorithm. I am a computer science major, and that should be pretty much as far as it goes for people talking about algorithms. But today, algorithms of the algorithmic approach has become something quite understood by people, and it really comes out of the frustration, that and in the way that it's been applied.
What do you want people to be using Vero for, though? It's primarily a photo sharing app, but you can do other things within it.
Actually, we put as much emphasis on the different types of things that you can share. So yes, you can share photos and video, anything from your camera roll, essentially. You can also share any link to anywhere online, and we allow you to do that in numerous places, between your bio, the caption of what you write on a photo app, that you post, or a video. But you can share a link as well. So you can share music that you're listening to, books that you're reading, movies and TV shows that you're watching, and places that you go. And essentially what we want people to use this for is to really express themselves in the way that they want.
user reaction. What about rival reaction? How do you expect the likes of Instagram, the likes of Facebook to react? Will we see them move away from the algorithms that you have talked about, move away from the adverts that you've suggested?
I mean, certainly if the things that we're doing inspire others to do better, then, that's extremely satisfying. I think that the business models that they are currently in make it very difficult for them to move away from that. And so it's not that they're against a chronological feed. It's just it doesn't make sense for their business model. Their business model requires people to use the app as much as possible. And therefore, they need to always come up with ways to increase growth, et cetera, to always have something that brings you back into the app and use it more often. And we're not about that. We believe that technology should serve us. We shouldn't serve it. We should, be free to live our lives the way that we want. And technology should be an enabler and not a distraction and a detraction from life.
That was Vero CEO Amin Hariri and Bloomberg's Caroline Hyde. And that does it for this edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.